Hey, welcome back. All right, so today we're going to continue with part two of Please Don't Use Accounting Squared. So we're going to go over prepaid expenses, we're going to go over depreciation, we're going to go use unearned revenue, and we're going to look at the two accrued accounts, expenses and revenue. All right, so let's get right into it. Grab a pen and paper if you need to, and a reminder if you need to subscribe so that you get the notification as soon as they post. All right, let's do this. Let's go through these examples of adjusting journal entries. So the very first thing we should be writing out is the accounts for reference. So just practice, just like we used to do with the other ones. So please don't use accounting squared, or you can write it AR, AE. All right. So what are the two accounts for the prepaid? So remember, we're doing debits and credits first, so let's write those out. So blank expense, and then prepaid expense. What's our prepaid? Whatever it is. Depreciation. And remember, it's contra. I like to just write this down just so I remember that it's reverse if it ever comes up. Right. So what's the formula for depreciation? Is cost minus selfish life minus useful life. And then the accounts would be depreciation expense and accumulative depreciation. Unearned revenue, well, we've done this before, so you should know these by now. So unearned revenue is the first one. And do we remember why we're doing unearned revenue first and why it's important to know the orders? Do you remember? So we need to be doing debits first, credits second, right? So it's important. And write it down till you get it memorized 100%. It doesn't hurt to write it down so you remember. So accumulative revenue, so the two accounts. So accounts receivable. All right, we've done the job, but we haven't invoiced them yet because we haven't got around to it. Remember, we looked at the time frames earlier in the previous video. And then, whoops, is blank revenue. And then accumulative expense is blank expense. And accounts payable. All right. And the last thing I want to do before we get going, actually not last thing, but we're going to first always write down the Cruz, just a good habit. If you don't know it, you can't visualize it, it helps a lot because it allows you to double check as you go. Are you doing the right account first? And the more you do this, the more you'll visualize it as you do your exercises and doing the adjustments. All right, so we know the accounts. The last thing I want to write down is the 4 steps. Okay. So what is step number 1? Step number 1 is pick the accounts. So which of these are we going to use? So you need to pick one. Second, write down the accounts. Third, do the math. Each question or transaction will have its own possible math, so make sure that you're following along, especially when you're looking at depreciation and prepaid. Just be careful what it's saying. So take your time. Do not rush through it saying, oh, absolutely it's prepaid or it's absolutely depreciation. Just blow it out. Take your time. And last but not least, fill it out. All right, so we are good to go. So let's look at the 4 steps. So step number 1, so for A, so Colleen's bookkeeping company has approached its year end, June 30th, 2016, journalized adjustments required for year end. Perfect. So let's pick the accounts like we did in previous videos. So advertising expense for the month totaling has been both unrecorded and unpaid. So it's an expense that has been unrecorded and unpaid, so that would be accrual. If you want to put a little E here, that's good. So that one's done. A revenue of $11,000 unadjusted balance is in the supplies account shows its remaining balance. So sometimes you get confused because you see unadjusted, but supplies. What are supplies? If you said that they would be assets, you're right. So it kind of helps you figure out which one of these. And we've used up some of our assets that we prepaid before. That's remaining. So that is P. All right. The estimated depreciation of the building is $3,400. So it tells you right in it which one it is. And this one would give us, so obviously right away we know there's not going to be a whole lot of math required for this one. So that's depreciation. All right. Of the consulting fees by KB Booking Company received in advance, $2,000 has been earned. So when you see earned, I mean, it's a bit of a flag, tells us. So that's unearned revenue. So that's the U, right? Because we received it in advance, but we haven't done it yet, right? Only 2,000 has been earned. So we need to make that adjustment. So E, 2,100 of rent paid in advance has expired. So rent has been used, so we know that's prepaid. So that's P, because we've used examples of that in the past. Consulting fees of 22 have been earned by the end, but not yet received. So this is maybe a little bit of a tricky one. So consulting fees have been earned by the end of the year, but had not yet received. So we haven't done it yet. So, sorry, consulting fees, I have to read myself sometimes. Consulting fees have been earned by the end of the year, but not yet received. So we haven't been billed for it yet. So that would be, we haven't set it to bill yet because we haven't received it. So that's accrued revenue, right? Because it's revenue fees, so it would be revenue, but we haven't, we've done it, but we just haven't got around to billing it, or we haven't received it yet, so it hasn't been recorded. So that would be accounts receivable because someone's going to owe us the money in the future. All right, and the last one, equipment purchased for 4,000 has, well, as soon as you see these keywords, useful life and salvage life, you should already know, it gets you into depreciation. And also that's kind of a note that, hey, we have to do a little bit of math on this one. All right. All right. So now that we've labeled those, it's following our steps. We'll go through and then we'll fill it out. So the first one, advertising expense. So let's write out the accounts first. AE. So AE is, we'll first write down the date. It's June 30th. June 30th. And write down the accounts from here. This is why it's helpful to do it. So what is it? Advertising expense. Right, from here, advertising expense. What's the other one? Accounts payable. Right. So all we're doing is just writing down from our steps, writing down the accounts. Now we can do the math if we need to. There is no math in this one, so it makes it easy. So we know debits are first, so we know which left and right we're doing. So the amount was $310. And accounts payable is $310, right? But we haven't recorded, so we've we've increased our advertising expense, right, from here because it's the left side. So our expenses have been, we just haven't recorded it, and we haven't paid it yet. So it's accounts payable, so we have to pay it later. We just probably because the end of June 30th, we're not gonna get around to billing ourselves till next month. All right. And sometimes it helps, I find, if you read the statement and kind of help explain it in your own words what's actually happening. It helps understand. It also helps verify that you've entered it correctly and you picked the right accounts. All right. P. So we've already labeled that one already. So let's write the accounts down. So June 30th. You have to write the months, the date down every time. And the accounts are something expense. So these are supplies. So supply expense. And prepaid supplies. All right, perfect. What's next? Do any math? Let's have a look. Is there any math involved? A review of 11,000 unadjusted balance. So the balance was originally $11,000. In the supplies account shows remaining 8,000. So it originally at the beginning of the month was 11,000. At the end of the month, the balance was 8,000. So how much did we actually use? So this, we could do some math in our head, but for those that struggle a little bit, so 11,000 minus 8,000, right, gives us 3,000, and then we're good. So let's fill it out. So debits first. Perfect. C, depreciation. The estimate yearly depreciation for the building is $3,400. Perfect. No math involved, so we know that's depreciation. We did that. Let's write down the accounts. So for June 30th, and depreciation is depreciation expense and accumulative depreciation. No, and it tells us so there's no math, so we don't have to worry about it. It's $3,400. Right? And we again debits first, credit second. So once we write these out, it's easy to determine which, if we go left and right, because we're always doing debits first, and we know that because we've memorized these um, accounts in a certain order, so it helps us. It helps us less. Don't make mistakes. I mean, that's what happens when you start whipping through. You get cocky, and sometimes you make mistakes. All right, let's move on. D, it's a U, so it's unearned revenue. So following our steps, we've already picked the accounts. Is there any math involved? Well, we'll do that in a second. Let's quickly write down the date. Write down the accounts. It's a U. So unearned revenue. Revenue. And consulting. What kind of revenue was it we're talking received in advance? So consulting fees, 2,000 has been earned. So consulting revenue. Okay. So that means we've completed some of it, not all of it, but only 2,000. So 2,000, right? Unearned revenue, because unearned revenue is a liability, right? So it's decreasing because we had owned whatever the balance is. It doesn't say specifically. Um, It could be some off of it, but we don't know. So it's minus. So debit happens first, and then consulting revenue. Look down at R, happens on the right hand side. Perfect. All right, let's move on. So the next one, June 30th. We know it's a P. We already picked the account, so write down the accounts right away. We can. $2,100 of rent paid for in advance. Okay, so we practiced this before. So this would be rent expense. P paid rent. So this one you guys have done numerous times in examples. Let's see if there's any math involved. 21 of the rent for paid for in advance has expired. So we've used, expired means we've used it all up. So $2,100 and $2,100, right? Perfect. Check. Letter F. Consulting fees of $2,200 have been earned by the end of the year, but not yet received. So that means we haven't been billed yet, right? So that's going to be some revenue. So let's write this down. June 30th. Let's write down the accounts. So we've already agreed that it's accumulative revenue, which is this one here. So accounts receivable. It's easier when you break it down. If you try and do it all at once, you're back and forth on accounts and it gets confusing. What kind of revenue are we talking about? Consulting revenue. Consulting revenue. Perfect. And how much was it? $2,200. Everybody, but I received. So $2,200. There's no math. And that's it. Perfect. And then the last one, depreciation. So because we've already labeled it, it helps. So we just jump right into depreciation. So let's write down what it is. June 30th. So what are the accounts? Depreciation expense. And accumulative. Depreciation. All right, so let's read it. Equipment purchased for $4,000 has a useful life of 4 years and a zero salvage life. Okay, so we need to do some math, right? Because we wrote down the accounts. Let's do the math. So I'm just going to write it over here so you can see it. So the cost, right? The cost purchased is $4,000 minus zero salvage life. So minus zero. So we don't really need to worry too much about that. Divided by 4 years. So for quick math, equals $1,000. Makes it easy. So now what do? We fill it out. So we do a debit skip first. So it's $1,000. And accumulative depreciation is $1,000. Okay. And that's it. Okay. If there's any questions, by all means, write in the comments if you want, and I'll try to help you out. And that pretty much walks it through. So again, the important part, follow the steps, write down the accounts, get really comfortable writing these down. Because once you have this down, it's easy. Because then you can go through and just pick the accounts. And again, do the 4 steps, right? Which of the PDA is it? Write them out, and then break it down, write out the steps. All right? That's it, guys. I hope that helps. And in the next video, I will be posting a practice test so you can get ready for the adjusting journal entries. All right, guys. Hope that helps. Thanks.